to our third webinar for National Home Buying Week. Thank you all so much for joining us this evening as we help you to unlock the door to your first home. Today we are joined by our partners as we discuss the big three: legal, financial and credit, all aspects of buying your first home, which actually are really, really vital and very important. At First Time Buyer Magazine, we are very keen to help and educate everybody on how to actually navigate the process of buying your home, which can be very, very hard. So we decided to launch National Home Buying Week, and we have a fantastic website, which is nationalhomebuyingweek.co.uk, which is educational, it's full of guides, it's got videos, it's got so much information, all in one place in very easy to understand language, jargon free. And we do hope that you'll have a look at that, because I do think you'll find there's so much there that you will need. So let me introduce our fantastic panel. We have Adam Crawford, who's partner and head of new builds at Prince Evans.
Evening.
Hello, hi Adam. Faye Wragg, who's advice team manager at Metro Finance.
Hi.
Hello, Faye, thank you.
Thank
And
you.
James Jones, Head of Consumer Affairs at Experian.
Hello, everyone.
Hi, hello. So as ever, this is a live session and we encourage you to comment, ask questions on our Facebook page. But if you have something that you'd like to discuss maybe later in the week or when you suddenly think about it, do email your questions to admin@nationalhomebuyingweek.co.uk. So I'd just like to start off, if I could just ask each of you to give us a sort of very small, quick overview of what your companies all do. So Faye, can we start with you? Could you tell us a bit about Metro Finance?
Yeah, of course. So we at Metro Finance, we are a specialised broker in the shared ownership sector. So we work with housing associations all over the country in terms of completing the assessments, the affordability, sustainability checks for anyone that wants to buy a shared ownership property. And we also then broker the mortgage that they will need to buy that property.
Great, really good, thank you. And Adam, what about Prince Evans?
Yep, so Prince Evans Solicitors are a multi-function law firm. So we handle things like conveyancing, wills and probate, family matters, personal injury, commercial law, various other elements. So we can look after all of an individual's needs. I manage a specialist new build homes team, which specialises, as the name says, in new build home property, with a particular focus on shared ownership and help to buy. I also manage the residential conveyancing team.
Great, lovely, thank you, Adam. James, can you explain about Experian, please?
Yeah, sure, Lynda, thanks. So Experian is a data company, and our main job is acting as one of the UK's three main credit reference agencies. And the role of a credit reference agency is to piece together everyone's credit history. So that's a factual track record of your credit behaviour over the last 6 years. And then we provide that to lenders when you apply for new or extended credit to support your applications.
Right, great, thank you so much. So I think we'll now start with a question, please, Dawn.
Yeah, so the first one is, why is my credit score important when buying a home?
One for you, James, please.
Sure. So, I mean, I sometimes describe your credit report and your credit score as your financial CV. Helps the lender that you may have no relationship with up to that point very quickly understand what sort of payer you're likely to be if they decide to grant you whatever credit you're applying for. So having a good credit score, is likely to impress a prospective lender and make it, very likely that you'll pass their criteria and be offered the credit that you want.
Great, lovely, thank you. Yes, another question, please, Dawn.
Yeah, so what is stamp duty and what happens after the current stamp duty holiday ends?
Oh, Adam, can you explain about stamp duty?
Yep, so firstly, stamp duty is a tax you pay to the government when you purchase property. At the moment, it's a little bit all over the place, I guess you could say, with various stamp duty holidays and relief supplying. Now, you probably all heard there was a stamp duty holiday that was due to end on the 31st of March. It's now been extended until the end of June, with a further extension, but on a slightly different term, until the end of September. So if you buy any property for up to £500,000, you won't pay any stamp duty until the end of June. After the end of June until the end of September, you won't pay any stamp duty on a property up to £250,000. Now, you also have to throw into the mix that as a first-time buyer, you also get first-time buyers relief, and that is up to £300,000. So you won't pay any stamp duty on the first £300,000 of a purchase, as long as the property is a value of £500,000 or less. So it's a little bit confusing and probably too detailed to explain here, but I would say it's a fantastic time to buy a property because you can benefit from a stamp duty reduction that if you were to complete the purchase by the end of June, although you're getting a bit tight to try and do that now, you can save yourself up to £15,000 in tax, which can be crucial as a first-time buyer.
Great, very good, thank you. Another question, please.
Yep. So when I apply for my mortgage, what documents does a mortgage broker need to see?
Faye, can you tell us about the documents you'll need?
Yeah, of course, thank you. So it's always good to be prepared if you are meeting a broker face to face, or if you're speaking with them over the phone. We deal with applicants over the telephone. So if you have something in front to read out, it helps us initially get figures as exact as possible, which is really important. In terms of then providing the documents to a broker, typically it would be things like your ID, so passport, driving license, so that obviously we can verify identity, proof of address, so proof of current address, something like a council tax bill, recent utility bill, or even a bank statement can suffice for that. Bank statements also, we'd be looking at things like credit commitments, income verification from those, and of course proof of income, very, very important in terms of establishing how much money we can borrow on a mortgage. A lender's going to assess your income and expenditure to do that. So payslips definitely are key in terms of getting the finer details of, you know, such basic salary, any overtime, bonuses or allowances that might actually help support your application. Or if you are self-employed, income proof is typically your tax calculations and overviews as well. And then I'd probably say finally as well, a credit file. As James mentioned, your credit history is really important when you come to apply for a mortgage. So it might be that your broker having sight of your credit file first could prevent, you know, perhaps applying to a lender that you might not, you know, fit the criteria of. So I'd say those are really key upfront to get engaged before we start getting into the application process, to make sure that everything goes smoothly, you know, as well as it can do from there.
Great, very good advice. So just to get it clear, if I was coming to you to get a mortgage as a first-time buyer, would we go to Experian first to see what our credit was like before we start the process of mortgages? Would it be we come to you, James, first to get an idea of where our credit was?
Well, I would say, Lynda, the best position to be in if you're planning to apply for a mortgage soon, or maybe you know 12 months down the road, is to know where you stand in relation to your credit score. Because a good credit score, as we said earlier, is a real asset. It's really going to open the doors to the best financial deals. We did some research on this quite recently, and it showed that customers with an excellent Experian credit score are 25% more likely to get a mortgage under 1%, a mortgage with an interest rate under 1%. Wow. Than people in the next band down, the good band, and obviously that translates into pounds and pence, and that can be quite significant, of course. So I think, you know, ideally, I think I would start to look at your credit score maybe 12 months before you apply for a mortgage, if that's possible. I know it's not always going to be possible, but that would be my ideal scenario, and that gives you a chance to, if when you're looking through your credit history, you find any problems, any anomalies with your address or any missed payments that shouldn't have been recorded as missed payments, to get those things sorted out way in advance of when a mortgage lender and the mortgage broker are going to start scrutinising your credit report when it really matters. So being prepared, and certainly I think if you're, if you've got an appointment with a lender or a broker around, that initial mortgage conversation, turning up with a recent copy of your credit report and score is, I think, certainly quite a helpful thing to do. So if I could just add one more thing, there's been a lot of talk around these coronavirus emergency payment holidays that many people have, taken advantage of. That they provided a really helpful lifeline for people who've been impacted by the pandemic. What I'd say is, although we've worked hard to make sure that people's credit scores have been protected, from these payment holidays where they've been agreed in advance with the lenders, as Faye explained, lenders look at other things as well, your income and expenditure and so on. And if you're scrutinising, if you're scrutinising someone's bank statement or using open banking to look through recent banking transactions, if you've recently been pausing regular payments, then the lender's going to find out. So I would just recommend that you're open and honest about those sorts of things, because you might, I suspect some mortgage lenders have different opinions as to what that means to them in terms of your affordability. So it's good to get that out into the open rather than have a nasty surprise, kind of further on in the process.
100%. I think you can't really hide anyway, because they will find out eventually, and far better to be upfront and then sort it out and move on to the next stage, sort of thing. Great, lovely, very nice, thank you. Dawn, do we have another question?
Yeah, so my parents want to help me with my deposit, but will this affect my mortgage application and the legal process of buying a home?
Oh, Adam, would it affect?
Well, yes. So obviously Bank of Mum and Dad is very common these days, and I'm sure Faye will be able to talk a bit more about that in a moment. But from a legal point of view, it would need to be disclosed to the mortgage lender. Routinely is accepted, of course, as I say, it's very common. But we would need to see evidence of the person that's giving you the gift. We'd need to see evidence of their source of funds, so how they've accumulated the wealth. They would also need to sign a gift letter confirming that it is a gift, it's not repayable, it's not a loan, etc. So generally you can't be loaned money by your parents to purchase a property, but you can be gifted it. But we would need much the same information that we would need for you in evidence in your source of funds, and identification for them as well. But it's routinely accepted by mortgage lenders. But yes, make sure you get that. Make sure you tell your lawyer that that's the situation as early as possible, so that they can tell you what information they require, and so that they can report it to the mortgage lender and get approval, because you don't want that delay in exchange at the last minute.
No, absolutely. Faye, you obviously have people that have parents or relatives that help out. How can you just give us a little bit of an idea about how that works from your point of view?
Yeah, of course, thank you. Very similar, common for gifted deposits to be used to fund the house purchase. In terms of how best to approach that with your application is, as we've mentioned, upfront and honest from the start. This is the source of the deposit, so that we can get the right documentation, which would be, again, as Adam's mentioned, what we'd call a gift letter. So some mortgage lenders have their own templates, if you like, that they want to be filled in. Typically, this would just cover who is gifting you the deposit, their relationship to you, how much money they are gifting, and also a statement to confirm that the money isn't a loan, which isn't generally acceptable. So it has to be a non-repayable gift. So it's not necessarily the case that you can never repay, your parents or relative later down the line if you're in a position to do so. The point is, there can't be conditions attached to the gift in terms of it's a loan, it's going to be paid back, X, Y, Z. So we would need that to be completed, and also to specify that the person helping you with the deposit isn't trying to gain an interest in the property themselves. So it's very clear that this is just gifted money, non-repayable. It's not that, you know, your parent is trying to buy part of the property with you. It's purely a gift in those terms. And then also we would need to see the true source of the funds. So if it is coming via a gift from parents, we'd look to see your parents' bank statement, just showing that they have those funds available to gift to you, and to verify that that is an acceptable source. It is accepted by mortgage lenders. It's very common, but it's better that we know early on than later down the line if we are advised that the deposit is, for example, from savings, and then we get bank statements which shows last week mum or dad or whoever actually transferred that money in, because in that sense, although it is in your own bank account, it is not necessarily savings just because of that fact. It would be classed as gifted if that's, you know, where it has come from. So we just check that up front nice and early, get the required paperwork, and then know it shouldn't cause any problems with your application. It's just important, you know, we get the right documents to make things move as quickly as possible, as Adam mentioned there.
I would just add as well that your mortgage broker and your lawyer need a lot of the same documentation. So it's actually a good idea to link the two up and authorize them both to be able to share information, as it would just make life a bit easier and a bit smoother for everyone involved.
Yeah, what a good advice. Because I mean, you know, if you've got to have photostat to everything, you can just get people to share now. That was a really good idea.
Just on the issue of borrowing money to raise a deposit, I think it is something that mortgage lenders do typically look out for, because obviously it speaks about your general affordability situation. So there's one of the reasons why we recommend in the few months running up to the mortgage application, you don't apply for any other credit, and certainly not things like payday loans that might suggest that you know, raise question marks over your money management abilities. So it's a good idea to, you know, to lay off applying for anything else in the couple of months leading up to the mortgage application.
Yeah, absolutely. Great. Well, thank you. Should we have another question, please?
Yeah, so I have a county court judgment on my credit report, which has been paid, but is still showing as unpaid. Will this affect me when I apply for a mortgage? And if so, how do I go about getting it removed?
James.
Yeah, I was going to say, I guess that's one for me initially. So, I mean, yeah, things like CCJs are, you know, obviously bad news for credit scores. It shows you've been taken to court for non-payment of a debt, and the judge has agreed that you need to pay the debt. If you go through that process, if you pay the debt within a calendar month, it actually gets wiped from the record. If you pay it after a calendar month, as long as the court's notified, it should be updated as satisfied. So in this case, it suggests that for whatever reason, the court's not aware that the debt's been cleared. So notifying the court should kind of kickstart the process and make sure the records get updated, and then the credit reference agencies like Experian will be updated. I mean, to be fair, even a satisfied CCJ is not great for credit scores. It's likely, certainly if it's in the last couple of years, to lose you a couple of 100 points, certainly on an Experian credit score. But you'll certainly stand a much better chance of securing a mortgage if it is satisfied than if it's outstanding. You'll find some lenders simply have policy rules that they won't lend to people with recent unpaid bad debts. So getting that record updated is certainly very important.
Great. Yes. Do you have anything to add to that, Faye? I mean, I'm sure that, you know, you would be exactly the same advice as James, wouldn't you?
Yeah, definitely. So on the sort of credit report, if there is a CCJ, be it satisfied or unsatisfied, it is something that a lender will take into account when making a decision. So if it is satisfied, there are lenders out there who, you know, can accept the application. But lenders all have their own criteria, so what they are happy to accept or what they may not be happy to accept. So essentially your choice may be limited somewhat. If you approach a broker like ourselves, particularly a whole of market broker, who could look anywhere essentially to place your application. They may be that depending on the dates of the CCJ being registered and the date of how long ago it was satisfied, and also the amount of the CCJ. Something that's, say, below £500 or £200 is more likely to be accepted than a more recent higher amount default. So in that sort of scenario, we would be best to check, a copy of the credit report, cross-reference that with lender criteria, and see if there is somewhere we can place the application. It's one of those things with adverse credit in the past, time is then on your side, so it might be the case that you do have to just wait a little bit longer until it's more in the past, and your credit score will then rebuild and improve and perhaps increase your chance of applying to a lender. There are some out there, lenders who specialize in what we'd call sort of credit impaired applications, whereby the lender might be happy to take on an application where there is past CCJs, defaults, or other credit issues, but those lenders, you are sort of limited obviously in how many they are, and also their interest rates, their fees, charges, they tend to be a lot less favorable than your sort of maybe high street banks, who would prefer a much sort of cleaner credit history.
Absolutely. Right. Well, I mean, it's not hope. If you have had a blip, it's not the end of the world, but it's far better to do what you've just both of you said. So, yeah, very good. Thank you. Another question, please, Dawn.
Yeah, so I'm looking to purchase on the open market, but the property I'm looking at has a shorter lease of 82 years. Can you give me an idea of how lease extensions work and also some of the costs involved?
Oh, Adam, could you explain about the lease?
Yeah, now lease extensions could be a seminar in its own right, to be honest. So it's quite difficult to cover that. It's quite difficult to cover that very briefly, but essentially, if you've owned a property for 2 years, you would have a statutory right to apply to extend your lease. Now, in the scenario you've just given, there's 82 years left. Obviously, it could be a little bit problematic because once you've owned it 2 years, you're talking about 80 or 79 years left. Now, once a lease has less than 80 years left to run, it becomes much more expensive to extend because something called marriage value kicks in. So you'd want to try and extend it sooner. Now, you've got two options. One, you can ask the current seller to extend it simultaneously with their sale to you, or to even serve the requisite notice and then assign it to you. Alternatively, and probably preferably, you can actually just talk to the landlord about doing a voluntary lease extension. So approach them, ask them for a price, decide if you're happy with that price, and then actually just proceed. To do a lease extension, what happens effectively is a variation to the lease. It's treated as a surrender and the grant of a brand new lease, but it will normally be on exactly the same terms as previously, except you'll be granted a longer term, normally 90 years on top of the existing term, and normally it will also abolish any ground rent. So I guess my biggest advice would be, if you're in that situation, bring it to your conveyancer's attention as soon as possible, so they can start having conversations with the seller's solicitor, and also bring it to the agent's attention so they can start negotiating with the seller on your behalf as well about how you overcome that. But certainly be cautious if you are going to purchase a shorter lease, because in the longer term, it could have quite a detrimental financial impact on you. It's just worth pointing out as well that there's an awful lot of change expected very soon in the leasehold market. There's been government consultations, and it is proposed that it will make extending the lease both cheaper and quicker and easier to do for everyone involved. But the sort of devil in the details not yet been released.
That'd be good if they did that. I'm sure a lot of people would be very happy with that. So if you buy a new build property, what is the average lease that you buy into then?
So typically it's 125 years if you're buying a shared ownership property. Some private developers will grant you a 250-year lease or even a 999-year lease. But typically you're going to get 125 years, and that's perfectly adequate, because you're not going to have to think about extending that for 25 or 30 years, by which time no doubt you will have moved on.
Yeah, absolutely. Great. So this is only really for older homes that obviously have got a lease that's run out to that point. Okay, lovely.
Yeah, so historically, a lot of people used to grant 99-year leases, including in the shared ownership market. So you do find a lot of those properties that are in the sort of lower 80s and do need looking at.
Great, thank you very much, Adam. Very good. Another question, please, Dawn.
Yeah, what are some tips and ways that I can boost my credit score?
Oh, James, tips to boost your credit score.
So, well, thanks for that. So, yeah, I mean, as well as National Home Buying Week, it's also Credit Awareness Week, which is an annual campaign Experian runs to help encourage more people to take control of their credit scores and share kind of tips on the things you can do to boost your credit score, you know, particularly if you're planning to make an important application like your first mortgage. So the obvious things to do, as I say, time is helpful. If you can do this well in advance of making the application, then you've probably got more options open to you. Is get a hold of your credit report, check it through, make sure there are no obvious errors, and if there are, you know, let us know and we'll help you get those fixed. Things like registering on the electoral roll, which you might not be aware actually features on your credit report at all. We do collect that information. Helps lenders check your name and address and your periods of residence, but also says something about your general stability. And as a result, it actually wins points in your credit score calculation, about 50 points on the Experian credit score, which exists on the scale of 0 to 999. So that can sometimes be really helpful and a very easy win. One of the main constituents of a good credit score is a track record of paying things back on time. It's the nuts and bolts really of building a good credit score. So, you know, if you do have credit commitments, then do what you can to avoid missed payments. Use direct debits, for example, to help you not forget to make payments if you're lucky enough to go on holiday or something like that. I know it's unlikely at the moment. But also, I mean, if we were talking about, I think Faye was talking about time in terms of the relevance of adverse credit. Certainly, even if you have missed payments or incurred a default or a CCJ, the older that gets within that 6-year period that credit reports stretch back, the less impact it's likely to have, the less relevant it is to your financial standing today. So time can be a great healer. So in a way, replacing historic negative information with more recent positive information, you're tipping the scales in your favor. One of the things we're also raising during Credit Awareness Week is the plight of people who have, if you've got negative credit history, then you're not going to get a great credit score in all likelihood. But also you can struggle if you have a limited credit history as well, and you can find yourself in that situation, you know, in all sorts of scenarios. If you've just turned 18, if you've come to the UK from overseas, you'll be starting from scratch. So there's advice on the Experian website around the things you might be able to do to start to build that track record and therefore get a better credit score and qualify for better deals. So those are some quick tips. As we were saying before, you know, mortgage lenders tend to be quite sensitive around borrowing, especially if it's quite recent when you're making the mortgage application. And if you can actually pay down existing borrowing in the run up to apply for a mortgage, I think that narrative will be evident to the lender when it's assessing your financial situation, and that will probably tell a good story about your financial situation.
Great. And is this have you just launched this app? Is it called Experian? Is it Boost? I can't remember the name of it, where you can boost your rating.
Yes, we have. So using open banking, we've got a new free service called Experian Boost that basically gives you the opportunity to voluntarily add in additional evidence that you're a good payer. Basically, information that the credit reference agencies traditionally haven't had access to. And this can include regular payments into savings, payments to council tax, which, as I say, you might think we have on credit reports, but we actually don't. And payments to digital streaming entertainment services like Spotify and Netflix and Amazon Prime, you know, lockdown essentials, if you like, for many of us, you know. And now, as I say, using Experian Boost, you can actually kind of passport that information into your credit score calculation. It will never go down. It's only a score improvement service. And around half the people that register for Experian Boost actually do see their credit scores increasing. So again, that can be a really useful way to give your score a lift and help you qualify for the best, i.e. cheapest deals out there.
And that's just an app you get on your phone. Is that right, James?
It's a feature on the Experian website and on the Experian app, and all these things are free.
Very, very good. Yeah, it's very, very easy. I know that when that first came out, we did a little try, and I do know that Dawn and my art director on the magazine, Ryan, their credit score went up, which was great, wasn't it, Dawn?
Mm.
I was muted, wasn't I? I always have a few extra points.
Yeah.
Brilliant.
Every little helps.
Exactly.
Lovely. Great. Another question.
Yeah. So what is a mortgage in principle, and do I need one to put an offer in on a home I like?
Faye, mortgage in principle.
Yep, so a mortgage in principle, you might hear this referred to under different titles, such as agreement in principle, or shortened to AIP, or decision in principle, shortened to DIP or DIP. They're all the same. Even mortgage promise sometimes is used as well. What that is when you apply for a mortgage, there's sort of two stages to the application. The first is this stage, the mortgage in principle stage, which essentially is your broker would declare your details to the lender via usually an online application system. And at that point, the lender will make a decision. So an accept or a decline, or sometimes they may refer back to your broker for more information to make a decision, or refer through to an underwriter. What happens at that stage is the lender undertakes a credit check. With most lenders, it's what we'd call a soft credit check, which essentially doesn't detrimentally impact your score. It's just the lender doing a search to check if your credit history, meets their criteria, basically. At the same time, as well as checking credit history in terms of, any adverse credit, some lenders will do a score check as well, which is just looking really at how highly you score and if you meet their internal parameters. But also lenders will look at existing credit commitments on there. So any loans, any credit card balances outstanding, leases, hire purchase, things that show on your credit report, the lender will pick up, if you like, at that stage. So they will factor those amounts into them making a lending decision of how much money they can give to you, basically. So it's a very key stage. At the end of it, if you do get an accepted result, that result, often produced in the form of a certificate, is usually what will be needed in order for you to look at reserving a property. In the shared ownership market that we are in, the housing association selling the property would normally need that alongside proof of your other documentation, perhaps to secure a reservation of a plot. So it's very key, that stage. Beyond that, the difference between having a mortgage in principle and a mortgage offer is also something that's worth us clarifying, because a mortgage offer only happens later stage, whereby we've actually submitted what we call a full mortgage application to the lender. And that's where we not only tell them, about your income and outgoings, we provide whatever documentary proof that they need to support that. So beyond the mortgage in principle, to get then a full mortgage offer, we would need to supply documents to the lender for the underwriter to assess. And the lender would also need to conduct a valuation check on the property. So those are the sort of stages beyond the mortgage in principle that potentially could, result in you being declined before you get the offer. So mortgage in principle is very, very important. First stage. Beyond that, if you do reserve a property, you wish to pursue it further, the next thing your broker would be assisting you to get to is mortgage offer, by going through that full application. And at that point, the offer then will go through to obviously the solicitor to allow you to complete on the purchase. You wouldn't be able to complete without that, just on an AIP.
No.
If that makes sense, yeah.
How long does that last? So if you get one, does it last weeks or months?
Yeah, good question. Typically, the lender AIP would be valid for 3 months usually. Right. So within that window, we would look to submit the full mortgage application. If you did have a mortgage in principle that did expire, it's not necessarily a problem. We would just apply again. It's, as I mentioned, it's usually a soft footprint. So unless you were applying, to various lenders within a short space of time and having multiple searches, there wouldn't be harm usually in obtaining,
No.
more than one agreement in principle if needed.
Great, lovely, thank you.
Thanks.
Another question, Dawn.
Yep. So I'm looking to purchase a property with my friend. Is there a difference in the legal process when we do this?
Well, buying with friends, Adam, how does that work?
Well, there's no difference in the legal process. I mean, obviously the conveyancing process is exactly the same. However, there are some considerations you need to carefully think about. Not just if you're buying with a friend, but if you're buying with anyone, if you're buying with a husband, wife, partner, you need to think about how you want to hold the property. Now, there's two different ways you can hold a property in this country. One is as joint tenants. That means that in the event of one of you sadly passing away, the property would automatically pass to the survivor. The second way is tenants in common. Now, tenants in common means that it wouldn't automatically pass to the survivor. It would follow your will or the rules of intestacy if you do not have a will. And just a note there that when you buy a property, it's a sensible time to also think about making a will. But if you buy as tenants in common, you can then specify either a simple percentage that you both own, or you can go into more depth. You can ask your solicitor to draw up a declaration of trust and actually specify your respective shares, what happens in the event that one of you wants to sell, who's responsible for what outgoings, etc., etc. And if you're buying with a friend, I'd say it's really important before you start the home buying process that you sit down with your friend and have that conversation. You don't want to fall out during the process. And then make sure again that you tell your conveyancer as early as possible precisely what it is you're looking to achieve so that they can draft the necessary document for you.
Yeah, very good advice, because I can imagine that could go seriously wrong if you...
And it does, Lynda. English case law is littered with cases of co-owners falling out over property.
Yeah.
No one ever thinks that what happened to it does.
Yeah, so really get it all signed and sealed and done before you even start. Absolutely. Very good. Another question.
Yeah, so my address is wrong on my credit report. How would I go about getting this fixed?
James.
One for me, I think.
Yes, please, yes.
So, I mean, if you check your credit report, which you can do for free now under GDPR, via ours and the other main credit reference agencies' websites. If you check your report, find anything on there you think's wrong, then we want to hear about it, because it's so important that credit reports reflect the facts, especially your address, because it's a key part of your kind of financial identity. Certainly in relation to credit reporting, your name and address are kind of things we use to actually search and compile your credit report. So if there's a mismatch on your address, so say the version of the address that you provide is different from that Royal Mail records, or maybe different from that the local authority records on the electoral register, those mismatches can cause problems. So you want to kind of address that as quickly as possible, and we can give you guidance, depending on your particular circumstances.
Great. So you just go on the website and there's obviously contact how you do various things, isn't there, James, on your website?
Yeah. Once you get your credit report, we provide lots of guidance on how you can get in touch and get help if you need any support about it. Great.
That's really good. It's nice to know that there's somebody to help you at the end of the line if you do get stuck, isn't it?
And that's one of the things we're talking about, during this campaign this week. We want people to know that we're here, we can help. Your credit score is important. It's not the only thing lenders look at, but it is, an important, it's kind of like your credit reputation in a bottle, if you like.
Yeah.
And it's quick and easy to check on our website or on our app. And there's lots of guidance online as well on the things you can do, the sorts of things we've been talking about this evening to get your credit score in a great shape to support any application you want to make in the future, be it for a mortgage, a credit card, a loan, or even something like a mobile phone contract. Or some energy providers run credit checks before they set you up with a monthly payment account. So it's has kind of wide ramifications, your credit score. So it certainly pays to take a bit of time to make sure it's in great shape.
well, particularly with first-time buyers, they have never done most of this before. They've never needed to. So I think, you know, all of you would agree that you should go to people like you say, Faye, you specialise in shared ownership mortgages, so you know every little detail, don't you, with that? And Adam, you would say the same. If you're having a shared ownership, you're buying through shared ownership, go to a specialist.
Yeah, it's essential, to be honest, because there are differences with shared ownership, and if you go to someone who doesn't specialise, they won't know the quirks of it, and you'll probably find that your transaction will be delayed, quite frankly.
Yeah, absolutely. And there are, you know, it's very easy to just walk down the high street and think that lawyer or that whatever will be fine, but actually it doesn't work like that. You really need to do a bit of research and find certainly a mortgage advisor and a solicitor that you know will work for you for what you're buying. Great. I think we've got time for one quick question before we finish.
Yeah, so I have a smaller deposit, probably around 5%. Can you tell me more about the 95% mortgage guarantee?
Oh, this is the new 5% mortgage guarantee, Faye, that's came out in the budget.
Yeah, so I mean, at the moment, the 95% mortgage guarantee, what that essentially would mean is you put down a 5% deposit. So that would be 5% of the full market value of the property. And the guarantee comes in where the government will essentially indemnify the lender up to 80% of the property value. So what it's about really is giving lenders confidence to be able to offer these mortgages with lower deposits put in by the applicant, which are typically seen as higher risk to the bank. It gives them that sort of assurance in event of default, so non-payment by the borrower, they've got that indemnity from the government. There are, however, still at the moment, still 95% mortgages available, particularly on schemes such as shared ownership, which we specialise in, and also we have the Help to Buy equity loan scheme as well, still available for first-time buyers. Now, one key thing with your 5% deposit is checking which scheme requires what level. Is that 5% of the full market value, which it is for the mortgage guarantee scheme and for the Help to Buy equity loan scheme, or for shared ownership even, it's actually only 5% of the minimum share value. So with shared ownership, typically you can buy, you know, between 25 and 75% of a property, depending on your affordability. So there are, you know, options with smaller deposits of 5%, where you can put down just 5% of the 25% share value. So that could be anything really on a property, say, if the full market value is 200,000, if you're buying a 25% share, then potentially you could just put down a deposit of 2,500. So lower levels of deposits, although it is something that you'd need to check if it's acceptable. There are options out there, and I'd say particularly with shared ownership, helping with the lower end of deposits, and also the mortgage side in terms of how much money you need to borrow, what capital you need to raise. Again, with shared ownership, you're then only raising the capital of the remaining value of the share from the lender. Whereas on the mortgage guarantee scheme, although you put in 5% of the full property value, you'd still need the ability to raise enough capital from the lender to borrow 95%. So that's where, you know, if your income and other commitments perhaps won't allow that, there might be other schemes that work for you still with that level of deposit.
Absolutely.
Also, can I just jump in again, Lynda?
Yes,
It's also worth noting there's about to be a shake-up to the shared ownership market as well, and we're expecting in April a 10% minimum share purchase product to launch, so that you can actually buy a shared ownership property with just 10% of the purchase price, which presumably is going to impact the deposit as well, so that you'll be able to get on the ladder for even less money. So it's a great way to get on the property ladder.
And you think that will be announced in April, Adam, did you say?
That's what's being suggested. We're being told that the new form of lease should be available in April. We were told it would be March. I've not seen it yet. So yeah, one imagines it will be in April, and that coincides with housing associations' new financial years and things like that as well. So that would make sense.
Great. So it's kind of watch this space a bit, isn't it?
Yeah.
Just to see, because 10% would be incredibly affordable. Well, I think I'm afraid we've run out of time, but it's been absolutely fantastic to listen to all your advice and guidance. Thank you very much. This webinar obviously will be on Facebook Live. It will be on our nationalhomebuyingweek.co.uk website, and it will also be on YouTube, and I think it will be made into a podcast, and you can listen to that on Spotify. So wherever you are, you can tune in and listen. We'll be back tomorrow at 5 o'clock for another webinar. We really look forward to seeing you then. And thank you all very much for watching, listening. Thank you, Adam, Faye, and James, for giving up your time. Thank you. Bye-bye.